Pratik Gupta, who is the CEO and co-head institutional equities of Kotak Securities, spoke exclusively to ET Now on the current market situation and the way ahead for the Indian market, and he also highlighted which sectors are on his focus list. Let me share you the highlights of this interview. As per him, on the current market situation, he says that most sectors one by one are seeing strong economic recovery sooner or later, but at the current valuations, market do look expensive to him. But at the same time, he doesn't seem to be seeing any major local trigger for markets to correct from these levels. As per the retail, participation has increased in the recent times, and if you see the international cues as well, they are also quite supportive, where the Fed managed to manage the taper guidance very well, which is good for the emerging markets last night. And this time he sees that the impact of the taper by the central bankers will be less, as in when if we compare it when what was experienced by the markets back in 2013. In the short term, he does say that the markets could continue to inch up higher, but one should not ignore the medium-term perspective, like from 6 to 9 months of time from now, when Fed and central bankers will start the tapering. That could definitely have an impact on the markets. One can hedge this by buying puts, and one should really look for to reduce the portfolio risk, and should actually try and pick up and book profits in those stocks where the valuations are out of hand. The valuations are at such levels which are difficult to justify, and he also advises one to book profit in companies and sectors which are not only have high valuations but whose leverage ratio is also very high, and some of the stocks which are just up because the markets are going up. One should definitely look out for to remain with the fundamental picks and not with the laggards. Small and mid caps that have done exceptionally well in the past, one can also try booking in the one that have run up quite a bit. But saying that, high valuations are there, but it still offers some sectors and some companies where one can focus. Firstly, he highlights that banks, if you compare it with the Nifty and some of the other sectors that have been the highlighters, banks, he still feels that it offers quite a more run-up that's still pending, because relatively the pickup has not been seen that quite much, and especially that's visible for the private sector banks where he is focusing. Second sector on his radar is insurance company that offers a lot of growth opportunity in India because of the high demand of the insurance products. And thirdly, he is bullish on the IT services sector, where he still feels that it offers quite a good headroom for upside, and the growth has gone up, and it is a multi-year cycle that he is looking at. Talking on metals, he says that yes, they have definitely taken a bit of a breather because of the China situation, but they still offer an opportunity to accumulate for the investors. And some of the other sectors that he highlighted, like the buzzing one, real estate sector, he says that demand is there, definitely. The developers are coming up and trying to provide the supply, but one major factor is that property prices have now gone up. That's why he's bullish on the sector. But more importantly, he says that housing finance companies, in comparison to these developing companies, offer quite a good opportunity for investors, because the loan books have grown very well for all of these housing finance companies. Funding costs have come down, and the valuations are still attractive. So for him, in comparison to both of these, he would like to stick to housing finance companies. Now, talking about another economy related sector, that's the preferred segment, is in the auto sector. He will prefer auto ancillary in comparison to the OEMs, because a lot of EV disruption is going on. If you talk about two-wheeler OEMs, then he is holding a quite a bit cautious view on passenger vehicle. The inventory levels are not that high. The CV segment offers quite like 15 to 20% of upside from the current levels that could be seen in the next 1 year. So in both of the comparison from OEMs and auto ancillaries, he would like to stick to auto ancillary one. So these were the highlights of the conversation that we had with Pratik Gupta today. Hope this helps.